Okay, I hope everyone's having a nice weekend. Look forward to doing a video update here. I'm going to go through Bitcoin. I'm going to go through some of the miners. I'm going to go through first Bitcoin, lower time frame, and then I'm going to go through some higher time frame observations, and then I'm going to go through MicroStrategy. I'm going to go through Mara, Riot, CleanSpark, and then the MicroStrategy Bitcoin pair. And then we're going to call it a day. This is probably going to be a fairly in-depth video because I think there's a lot to cover. A lot of important things are going on right now. And so I'm going to kick it off with a chart that a lot of my followers have seen starting back in late summer as we were going through that period of angst and retest to that important $25,000 region. I'd kind of contended on the high time frame. We were simply in a high time frame sign of strength region above macro support. And Bitcoin really does love Wyckoff. And for those of you that know about Wyckoff or have studied Wyckoff or have looked into it, if you haven't, I encourage you to do so. I'm not going to go through a ton of that right now, but so much of what we see in Bitcoin's high time frame and even sometimes lower time frame patterns resembles the events that you would see in different phases of the market, whether you're in a distribution like we were in September 2021, whether you were in a macro accumulation phase like we were basically late summer through March of 2023. And then as it progresses through different stages of the market, you get, subplots within these accumulation, distribution, expansion areas where you get reaccumulation events, you get redistribution events. And so again, reminder, I'm not a financial advisor. Don't take what I'm saying as any kind of financial advice. Please do your own research. I am most certainly just doing this as my views. I could always be wrong. Everyone can be wrong. No one knows what's going to happen in the markets. I am just giving you what I see, and that's it. And so in the summer, we noted this structure being very eerily similar to a Wyckoff accumulation event. And I'd been tracking it from around this area in September. We saw a nice spring. Coming out of the spring, hit a last point of support area, backed up to that last point of support area, as you'll see up here in the diagram, and then moved into a sign of strength, basically engulfing the entire previous couple 6-week price action, sign of strength consolidation, and then phase E, as you'll note up here, is expansion, and moved into expansion. From there, we moved into expansion, and essentially what you would call a vertical accumulation expansion type of event, right? Where you're essentially just vertically accumulating as such. And we got to a nice buying climax. That's BC, buying climax on the Tuesday, December 5th, reaching $44,484 here on the KuCoin chart. And since then, we've been doing nothing. Essentially just a time-based kind of capitulation. A lot of different events. We had the ETF approvals. And so when I look at, again, what stage of the market I believe we're in, and on a high time frame, I believe that accumulation really ended in March 2023. And so what we've been experiencing is just a period of consolidation, expansion, consolidation, expansions. And so here we are with this chart here visualized, and this is the 8-hour, and I've got a schematic up here of what a reaccumulation event would look like. And for all intents and purposes, a reaccumulation event is simply just that. You've got a buying climax, an automatic type of reaction, a secondary test towards that buying climax. Let me make this a little bit easier. Right, an automatic reaction, you got a secondary test, and then some consolidation, and then you get an upthrust into this phase B, a move down, which is called the creek in this, and then the bottom gives out. Everyone thinks it's kind of dropping back into the previous range. Spring, you like to see a nice test, and then you get a last point of support, and this last point of support is that region here. You get price checking back to it, jump across the creek, sign of strength, last point of support. And that's where I think we reside right now. I think we're in this sign of strength, checking back to the last point of support region, for all intents and purposes, ending this 2-month, 2.5-month reaccumulation phase. And in Wyckoff, what happens at that last phase D, is expansion. Consolidation, like a spring being coiled, leads to expansion, if in fact that's the stage of the market that we're in, which I'm contending we are. And so what do we have? Kind of zooming in here a little bit, we've got the type of reaction you would expect. This jump across the creek happens fairly quickly. You get a short consolidation and that's what this SOS at this last point of support region stands for. And that's what we're doing, folks. That's what we're doing from a stage analysis. This is absolutely beautiful. And I talked about in the video last week, where was I wrong? And there was two places where I said I was wrong. Is if we kept kind of going sideways, then the angles of my counts would be off, and I would have mislabeled it. We were overdue for a big move to the upside, and so far we've gotten it. And so now I shift my attention to the next chart, which is the weekly chart, because I think there are a lot of really important things going on right now, and I see narratives that are bubbled up that actually fuel what's going on with, I believe, the price action we're seeing right now, but also expectations of what's to happen in the future. And so, as many are contending that this is the start of something, that institutions are here, price targets for the end of the year, next 2025. I do want to note that I think we're closer to the end of this move than we are to the start of the beginning. And what do I have up? What do I have up right now? I've got RSI at the bottom, and I've got a weekly chart up going all the way back to what I believe is the start of this cycle, which is December 2018. Excuse me. And so one of the most important things I look at is power behind the move, the momentum behind the move, and its corresponding price. And as you all that have followed me for a long time know, whenever we get above 70 on RSI is a very, very good sign, especially for Bitcoin, that the train, think about it as momentum, right? The train is starting to get going above 50, above 60, and then it hits 70, and that train is full force. And that's a hard thing to stop. It's momentum that is very, very difficult to stop. And so if we look at how Bitcoin reacts at certain areas in relation to its momentum, that's what I have plotted down here at the bottom, okay? That's what I have plotted down here at the bottom. And so where we are today is we bounced off this 66 area, and I've got a line under it, all right? I've got a line under it. And I've got a line under it for a reason, for us to kind of extrapolate where in momentum terms we have been within this cycle, within the impulses within the cycle. And so what I'm talking about when I talk about impulses within the cycle, that's the first impulse. This is the third impulse. This is the fifth impulse, okay? This was corrective 2, corrective 3. And for those that don't know Elliott wave, don't get too caught up in that terminology. It's just, the cycles, the movements within what I consider the larger cycle. And so when we look at it from a momentum perspective, getting above where we bounced off the 65 region in our first impulse. Let me just zoom in on each of these a little bit better for us. I'll just take these step by step because I think this is really important for expectations and, how long things could last. I get asked a lot about, targets, my high-end targets, but folks, I am not looking to hold the majority of my positions. Again, I'm not a financial advisor, so don't take this as what you should do, and I could be wrong. I'm not looking to hold the majority of my positions for the top. I'm looking for, let's come back to this impulse here. Okay. For example, I'm looking to get rid of most of my positioning in that region, in this third of three, right? 3, 4, 5 of 3. I'm looking to get rid of, and this is, minor wave 3. I'm looking to get rid of most of my positions in this area because tops are never guaranteed. And, I could have a top end target and can be completely wrong. In 2020, RIOT was at $1. I saw it going to $40. It went to $80. I was wrong by what, 100%? In November 2021, Bitcoin got to 69K. I saw it going over way above 100K. I was wrong. And so the lesson learned is, for me, is, have a profit-taking strategy. And I'm talking about that now because I think we're really approaching a point where things can accelerate pretty quickly. And, and even with some of these miners, $200, $300, $400, with time horizons of 2020, late 2024, late 2025. But if some of these names get moving to, 70, 100, $120 really quickly, that's what I'm talking about. That's what I'm talking about is having, don't be lulled into high-end targets. Say to yourself, I need a plan. If this money was gone, would I be okay? And if the answer is no, then you need to lower your expectations. I shouldn't say you need to, because that's financial advice, but you need to think about your expectations versus reality. And that's all I'm trying to say. So back to this exercise. I digress there. Sorry about that. Anyway, so we look at the first point where RSI, where it bounced here at the 65 area and the run it made to its local top. Let's just kind of look at that for let's look at that for an example. That was 175% move in 56 days, in less than 2 months. Okay, these things can happen really quickly. And that's what induces the market into thinking, oh, wow, look at that. It's only been 2 months. What about another 6 months, right? And so that's kind of point of confluence number one. Now let's look at it. Let's look at from this perspective, where momentum slowed down from this point. I'm just looking at it from a different perspective, where momentum slowed down and it hit its local top was 28 days, was less than a month, 80% move, okay? And then RSI kind of hit this 79 region, and you had a little V-shaped back under 70 prior to resumption. And so what happened after it hit this little V-shape into the same demand zone on RSI that I've got lined up, which is where we bounced off just now, from that low to the high, which ended up being that impulse high, was 89% in 21 days, right? 21 days. When I say that, when RSI gets up and over 70, that's some momentum. Things can happen fast. That's what I'm talking about in 89 days. And that ended up marking this impulsive top. Now let's look at what happened on August 5th, when it attempted to make another run. And I wasn't involved in Bitcoin here, but I'm talking about this area right here, right? Oh, we're so back, right? Boom, we're so back. And this is something I've learned since 2021. is how important these weekly RSI numbers are and how telling they are. Well, you got a rejection on the 70 here. That should have been the indication that this move was potentially corrective, and much more downside was in store. Much more downside was in store. Okay, next. What about back in August of 2020? RSI was rejected at 70, and that just meant some more downside was in store. Just more of a, this was a sign of strength, right? For those of you that have been following me, you know, that this whole pattern to me was just a beautiful accumulation, right? Where you've got this just beautiful spring event. This COVID low was a spring event, accumulation, sign of strength, and then expansion. And so in this case, the rejection occurred at the start of this third impulse, and that just indicated, you know, more patience was warranted in the short term, right? You got a consolidation, a check back, and then consolidation for, you know, a couple months prior to more expansion. Very telling. Now, where did expansion start officially again, folks? Where did it start again? Right around this area that I've got marked off, this 66-65 area on RSI. Since it's a weekly, I can't put it on the exact cross. But right when it crossed over from a momentum perspective, that area that we bounced off of in January, what happened? Well, from the point it crossed over to the point that it hit its local peak on momentum, you had a 79% move in about 42 days. So a month and a half. Okay. What do we get from that moment to the peak on RSI? The peak on RSI, that was a 270% move in 84 days. So in less than a quarter, 270% move in less than 3 months. Okay, so that's interesting confluence. Now let's look at kind of another area which I think is kind of similar to where we are right now as well, and that is this consolidation on RSI. Okay, so after this first move, and I'll get to this when I fast forward to current day price action, we have a consolidation here at relative strength. So momentum is consolidating, and what is price doing? Price is doing the same thing. We had a simple consolidation, right? Little ascending triangle consolidation pattern. And as soon as that bottomed and broke, right, where it was before, broke the local high, what type of reaction did we see off the lows in terms of price? Well, in 28 days, you saw 147%. Is that right? I don't think it's 147. 138% increase in 28 days. So again, just more evidence as to the importance of momentum and shifts in momentum, depending on where you are within the impulse. And then finally, we saw another example that's kind of relevant to today, right? You had a top out on RSI, and then it slammed back into an under. Well, it slammed back down towards this 70. Okay, so it's all over potentially, right? But then you get a V-shaped recovery on momentum, and what was the reaction on price? Well, in this case, you saw in 21 days 109% return. Okay, so you kind of see where I'm going with this, right? In terms of just setting expectations as to, you know, if and when what I expect to materialize in the short term comes to fruition. These are the times to start thinking about your profit taking strategy. Your profit taking strategy. And I get asked about alts a lot. Or alts going to just be a month, 2 months delayed? I have no idea. That's how it's been in the past, but I don't know. Maybe they go in tandem. I wouldn't count on anything, right? If gains are there, if we get this type of this movement very, very quickly, and you get some gains, you get to be very, very cognizant of securing them. Very cognizant of securing them. All right, this level that we breached right now on RSI is this next white line. It's at 75.25. Okay. This area was rejected off of in March of 2021, and price essentially kind of went flat. You got a rejection under where we are today here, and momentum continued to the downside. So key today, our RSI is above this line. I just want to note, okay? So that's why I have it here. From a technical perspective, a rejection at this line back in March of 2021 was bearish. We're back over this line right now, folks. We're back over this line right now. So let me now bring us to where we are today. Well, before I do that, let's go to, again, what we're learning. We're always learning. And if I'd known today what I knew back in March 2021 or November 2021, was the let's see, it tells us right here. Yes, 2021. What happened at this critical 70 RSI level? We had a rejection, okay? And then the next week, you had a candle that engulfed 1, 2, 3, 4 weeks of price action, okay? A month's worth of price action. And then it fell below the line here, the 65 area, which we bounced off of. That should have been the indicator that this is the start, that this was a corrective move and the start of something much lower and much more protracted, which it ended up being. Okay, now we're fast forwarding to where we are today. Back in the summer, or back in April 2023, we had a rejection at 70, but this was during the start of an impulse. Okay, that rejection of 70 at the start of a corrective move meant a lot more downside. Here, it just meant a lot more consolidation. Right? We didn't have a change of trend. This was simply consolidation over. For those of you that remember the chart I was posting, right? Accumulation, spring, right? Last point of support, SOS, sign of strength, okay? All right. And now it brings us back to where we are today. And where are we today? From a momentum perspective, well, we broke out of we broke out of this 70 RSI level on October. That was the key. That was the signal I was looking for to say, okay, this fifth impulsive move is now validated. Because we never saw a third impulse in this current cycle marked by RSI getting over 70. And so we had a peak, we had a consolidation, we had a check back, and now we've broken back above 70. We've broken over those local 2 peaks. Okay, we're over that area, and it's moving, right? And it's moving. And so far from this low, we are 25% in 14 days. 25% in 14 days. What does that mean? That just means to me, there's a high probability that we really get moving, and this market is really offsides. And are there narratives to support us really moving right now? Well, let's see. Grayscale's selling is coming to, looks like it's dwindling. Institutional inflows are picking up as of Thursday and Friday from what I saw. The halvening is right around the corner, where the supply shock becomes even more real and that narrative really catches on. And so, I mean, what more do we want? So that was a long one, but I thought it was important. Only in the aspect of the way I'm thinking about how quickly things could unfold and being ready. This is for those that you know, because we are going to all get lulled into, if this comes to fruition, we're all going to get lulled into, this is the start of something that, you know, could go on for a year, could go on for 6 months, could go on. And I see that a lot on Twitter. I'm seeing a lot on Twitter. And again, I always say I most certainly was looking for all-time highs much sooner for those of you that have been following me. But again, like I said last week, the key is we got to think about what didn't happen, right? What didn't happen is we never broke a structure. We simply consolidated. Much like in the summer when I was expecting us to break out earlier, I kept saying, what didn't happen? We didn't break out of this sign of strength region. We just consolidated, the simple consolidation, right? For like 6 months. And so boom, I was 6 months off because we consolidated for 6 months. I didn't see that coming. And here we consolidated for 2.5 months. But what didn't happen, right? We never saw these retests. We never saw movement down. We never saw, and that's what we've got to, we have to stick with, is what didn't happen. And so in the case where this count is correct, which I believe it is, it's standing up. It's standing up. I just want everyone to be very, very, very aware that this could come really, really fast. Be ready, have a plan, and I don't know, I could be really off with these high-end targets. My high-end targets, the average is 165. I can see it going up to 260, wicking up there. But I have to be prepared for myself to be wrong. And so my profit-taking strategy for derivatives, for miners, for options, is this area right here, okay? This area, 70 to, you know, 100, let's call it. That is where I'm looking to secure the most profits, and most certainly hold on to, I'll always hold spot Bitcoin. I will always hold it, but I need to be prepared that if this happens, right, and we go into some type of secular bear market, it won't matter. I won't care. Okay, that's what I'm trying to get at here. And so for now, the count is looking beautiful, right? If we zoom in, we are breaking out. This is a legit breakout. This is obviously, it's not confirmed because the week hasn't closed, but for all intents and purposes, you know, this hammer candle, I look for confirmation 2 weeks after. Hammer candle is bullish at the end of a downtrend. Green the following week, big reaction this week. Exactly what we want to see, folks. It's exactly what we want to see. And it's exactly where we wanted to see. Well, I wanted to see it much sooner. I was calling for this back in this area, okay? 1, 2, 3, 4, 5 weeks ago. But nonetheless, we got it. We got it. All right. I guess I'll have some low time frame fun, right? Remember, I've been saying recently low time frame is noise because I haven't had a read on low time frame. It's been very difficult for me to read, and therefore it's noise. If I can't read it, it's noise. The high time frame dominates when I'm unsure what's going on in the low time frame, and in this area, I was unsure about what's going on in the low time frame. Okay, and so this was all noise to me. This was even noise to me until we started doing some things that started looking impulsive, right? So we had a nice 1, 2, 3, 4, 5 wave move, okay, and then ABC 2, and so from that standpoint, as soon as the impulsive movement started revealing themselves, the low time frame I can now have a little bit of fun with and project. Okay, and so here we go. Let's have a little fun. So we got our impulsive 1, 2 minor 1, 2, and then a sub 1, 2, 3, 4, 5 wave move. Looks like 3, 4 could even come down here. Let me zoom in. I realize this is Again, on the computer or on the phones, this can be a little bit challenging to look at. So let me zoom in. So back to it. Okay, so we got this little sub 1, 2, 3, 4, 5, and then is 4 here, and now we're going to 5 potentially. I like the movement that we're seeing right now. Also have to be aware that, and it doesn't matter either way, this isn't going to change anything I do. I'm not trading Bitcoin, right? You guys know that. So could this be, A, B, C, an expanded flat correction prior to 5? Absolutely, it could be. So there's 2 scenarios. For now, I've got it labeled as 1, 2 potentially in. We'll see how it reacts tonight, tomorrow morning. 3, 4, 5, getting us up to 52, 53 area. But on the again, and the lens I'm looking at this impulse from, folks, the lens is what I just shared with you on RSI and how quickly movements can happen depending on where we are at what stage in the market. And that's why I went through that analysis, okay? Because I don't want you to think, oh, where the hell are you getting these numbers? Like these you're just absolutely crazy. Now, this is a daily chart. And so what I've got is a movement from here that, a subway 1 takes us to those 60s, we get a little correction potentially, and these could be so off too, right? This could be 58, and my correction here to 54 could be, 49. I have no idea if in fact this is what happens. Again, reminder, no one knows what's going to happen. This is my projection based on everything I just presented to you. And then I see, potential towards 80, 100K before the end of the month. And then this final move to conclude 3, okay, to conclude 3, to be, anywhere above 100K to 120K, somewhere in that region. All right, remember I just said, remember the exercise I just went through that shared some of the gains within certain time frames at confluent points in momentum as related to RSI. And so how crazy would this move be over the course of 47 days, a couple 100%. Now, given that I believe we're in this final 5th impulse, I believe that's more than realistic for a final impulsive movement while stocks are doing it right now, right? And this is why I'm less about the happening cycle and folks are telling me that, this is potentially distribution. Well, go look at a chart of Meta. Go look at a chart of SCMI. Go look at a chart of NVIDIA. Things are going parabolic in front of our eyes. We're in an environment where that is happening. It's happening in front of our eyes. Markets are going into price discovery. And so if we are, in fact, at the end of this, closer to the end of some type of secular bull market we've been in for, 20 years, then in this environment, I would expect Bitcoin to perform the best, perform better than it has in any of the impulses in this cycle. And so that's the way I'm looking at it, folks. That's the way I'm looking at it. Time will tell. I most certainly could be wrong. Next, man, this is a long video, but it is what it is. All right, MicroStrategy. We are going to, wow, why does my chart look, all right, we are going to a weekly chart of MicroStrategy, and I posted the chart. I just want to point our attention. I'm just going to zoom into what's going on right now, folks. Okay, I just want to zoom into what's going on right now. And that is a hell of a weekly candle, right? That is a hell of a weekly candle. We engulfed 1, 2, 3, 4 months worth of price action. Highs not seen since for almost 2 years. Putting this up in, let me put this up in line. I think gives us a nice, let me get rid of RSI here. Let me get rid of that. All right. Zooming in on MicroStrategy, there was an important level here that held. Let me get rid of those. Let me get rid of those. Let me get rid of those. Okay. Important level here that kind of held, right? This was the difference between kind of two markets for almost what, 2 years? 2 years, this green rectangle that I've got. And so we made a sharp move down into this demand zone, and we got a V-shaped recovery. And now, as you can see, we're at highs. Okay, we're at highs. We closed the week at a high, and this has all the earmarks to me of, moving right into its third impulse, 3 of 3, if you will, right? We got 1, 2, we got the minor 1, 2, 3 of 3, which, if for all intents and purposes, should be the most powerful. So I think all-time highs are the next move on MicroStrategy, and potentially more, given the short interest, given something else that I'm going to share next, and that is the MicroStrategy BTC pair. Okay. I kept carrying the narrative that now with the ETFs, MicroStrategy is no longer in favor. Well, I don't know about that. I don't know about that. I think it might. So often things are the opposite of what you think they are. And yes, most certainly. So the ETFs were launched on the 11th. Okay. Let me put this date out here. All right. So the 11th, I think that was a day, right? Thursday. Okay. So right there. So since the ETF was launched, how has MicroStrategy performed against Bitcoin? Let's see. So against Bitcoin, since the ETFs have launched, 25%. This is MicroStrategy denominated in Bitcoin I have here, folks. 25% gain against Bitcoin since the ETFs launched. So narratives are only as good as you feed into them. Now, it most certainly sold into that news. Then it's sold into the narrative, but the reality is, since the ETFs have launched, it's been the opposite. It's been the opposite. And so when I look at, and let me put this up in a weekly chart. When I look at the potential for this pair, and let me put this up in line because it can look a little bit, yeah, I think this looks a little bit clearer. Okay. There really is potential for MicroStrategy to do some pretty spectacular things here against Bitcoin. All right. I mean, from a market structure perspective, this is how I'm visualizing the market structure. Since MicroStrategy began acquiring Bitcoin, right? You got this broadening, right? Triangular type of structure, breaks out, bearish retest, boom. And then you've got a series of lower highs, lower lows, lower highs, lower lows, and then lower low. And then you have your first break in market structure in July of 2022. High time frame break in market structure. And then you have a new high, you have a higher low, higher high, higher low on the day that the ETFs started trading. And so there's potential here. Again, nothing is guaranteed, but simply looking at this from a market structure perspective, for, even if we were just to create a higher high in this structure, somewhere around here, around 0.0197, that's kind of conservative to me. For another potential gain, 40-50% gain. If it got to the top of this channel, 70% gain against Bitcoin. So I would be, and given the short interest, I believe it's around 20%, 18-20% short interest in this name. If and this kind of goes for all the miners as well, folks. I don't believe the short squeeze has even started. There's a lot of institutional short positions in these names. This level of 48,500, I believe it is that 618 Fibonacci retracement that every cycle rejects from and corrects from. That's the narrative that's out there that I don't ascribe to. If and when we clear that area and the market realizes they're offsides and they're wrong and this narrative isn't in play, that's when I think the short squeeze begins on these miners, on MicroStrategy, and that can propel these names way higher than people think they can go in a lot less time than they think that can happen. Okay. And that again comes back to my, if some of these names get moving really, really quickly over the next few weeks, even like next month, some of these things could double, triple, quadruple. You better have a plan to take some gains in that situation, because there's going to be narratives, MAR to 300, Riot to 300. None of that's guaranteed. None of that's guaranteed. Even if we're in some type of, super cycle and I'm wrong, you still have to have a plan to take gains much lower, in my opinion, than those numbers. That's just my view on it. All right, next. All right, what's next? I just did MicroStrategy. I already posted a chart of Mara, I think, on my Twitter. Why am I calling it Twitter? X. Why can't I get to the site? All right, folks. I'm pulling up the miners next. I'm gonna do. I'll do Riot and Clean Spark, since I did a Mara update on my X. All right. Let's do Clean Spark. Let's throw this in candle. All right, let's make sure I've got this in logarithmic, which it's not. Okay. All right, folks. Clean Spark, to me, it looks to be one of the strongest miners right now. And why do I say that? Because look at what it's done. I believe it's the only miner that has cleared its December highs with this weekly close, right? So you cleared the December high with this weekly close, and again engulfed, a month and a half's worth of price action almost. That's a sign of strength. And I get a lot of questions about other miners. I'm not an expert on miners. I am simply a technical swing trader at certain times when the miners look really attractive to me. And so I don't know which miner is better than the other. I really don't. I could spew some things I read off of Twitter, but that would be disingenuous. What I will say is this: we've all fallen into this trap, right? Names that are lagging the most have more upside, right? Look how far something has come. I'm going to get into the same name in the sector, like chips, semiconductors. I'm going to get into the name that's lagging the most because it has the most upside to catch up to Nvidia. No, doesn't work that way. I've learned that coming out of the COVID lows. I was bottom fishing while some names were just absolutely ripping, and learned a hard lesson that strength, you want to buy into strength. Institutions buy into strength. And so, not saying to buy anything, here. I'm just saying the notion that something has underperformed means that it has more room to catch up and get you more gains. That's not a way that I'd be approaching things at the moment. Okay, so the way I'm looking at Clean Spark is this important demand zone where I've got this rectangle. You got a strong reaction, you got a nice retest, and close right above the 50% retracement of its previous all-time high. That's bullish. That is absolutely bullish. It didn't do that in December. And so I would be looking for this next move, this third to terminate somewhere in the 80s, 80, 60, 80 range. And again, my profit taking strategy on anything is, again, like I said, I'm not talking about Clean Spark. I'm just saying in general, I'm looking to take profits in wave 3, folks. Wave 3. Okay. Next, Riot. All right, let's do Riot. And Riot again is another example of this. Like Riot's been underperforming, right? And so does that mean it has more catching up to do? I mean, not necessarily, right? Not necessarily. I could be wrong on these targets, folks. I've got Riot going to in this wave 3, 120. I had Riot going to 40 in its last one. Back here. Hold on. I had Riot going to this 40 area, and it ended up going to what, 80. But that happened literally in 2 weeks. Where did I take my profits on Riot back here? I took them here. Boom. Boom. That's where I'm taking profits. It didn't feel great. Didn't feel great watching it go to 80, but I most certainly didn't regret the profits that I took. I'll tell you that after the fact. Okay. And so zooming in on Riot, and when I say it's lagging, it is as I showed you with CleanSpark just breached its former wave 1 peak. Riot isn't there. But Riot did kind of break this downtrend that goes all the way back to previous all-time high. And closed above it, and also on the weekly chart closed above the cloud. That's a beautiful sight to see, folks. That's what we want to see. So where we had, this is concern, this is always concern under the cloud. One weekly candle, boom, through it. Power, reversal. You better believe people are jumping into these names. I don't know about Riot specifically again, but these miners are going to catch, in my opinion, a bid like we haven't seen in a long time. And when these shorts start having to close, this could get interesting. So that's Riot. I think that's it for the video, folks. This was a long one. I apologize, but I hope it was worth it. Have a great rest of your weekend. Here's to a couple weeks, 3-4 weeks, as I did in the early part of the exercise. I think we've got a rally that really takes us for 3 to 4 weeks of just aggressive price discovery, a lot of disbelief, but have a plan, folks. Have a plan, because nothing is guaranteed, and you're gonna hear a lot of narratives, and it's gonna be convincing. If it happens, if these things happen, you're gonna think like this time is different. But always remember, no time is different, in my opinion. Take care.